Welcome to the next episode of The Lair. I'm your host, Dr. Daniel Ford. And what I've been thinking about in The Lair is Bitcoin. Joining me today, my guest, Andre Kostylev, a Bitcoin enthusiast. We're going to talk about Bitcoin, and who knows what other topics might come up. Andre, welcome to The Lair.
Thanks for having me, Dan.
So, tell our viewers a little bit, because they may not know a lot about Bitcoin. What is Bitcoin? What do people use it for? How would you even get Bitcoin?
Well, sure. Let's start with the basics. So first of all, Bitcoin was created and it came out of the financial crash of 2008. It was created by either a person or a group of people that go by the pseudonym name of Satoshi Nakamoto. And the white paper for it was introduced in January of 2009. And what Bitcoin is a decentralized system for transfer of value. It is not controlled by anyone, by any government, company, or person, and it is completely borderless, so it can be used in any country around the world. As long as you have internet access and a computer or a smartphone or some sort of a smart device, you can use Bitcoin to transfer value to anywhere in the world without anyone else's permission.
So interesting. You talked about that this is not backed by any entity or government.
Correct.
If I use Bitcoin, how can I what kind of assurance do I have of its value or that it's worth anything?
Well, sure. That's another great question, Dan. The reason Bitcoin has value is pure supply and demand. When Bitcoin was first introduced, as I mentioned in 2009, its value was worth less than a penny. Why? Because no one knew about it, no one was using it, and hence there was no demand for it. But as more and more people started to see and make the use case for it, the value has grown from less than a penny back about 11 years ago to about $9,500 today. And back in 2017, it got up as high as $20,000 a coin. So the value definitely derives from the supply and demand. And it's also hard-coded into the code itself. Bitcoin has an inflation rate currently at 900 coins per day, or about 6.25 coins every 10 minutes. And that inflation rate gets cut in half roughly every 210,000 blocks, which translates to be about every 4 years. And it's going to be happening until the year 2140, at which point the last Bitcoin will be created and no more will be created after that. And the total supply of Bitcoin is going to be about exactly 21 million coins at that time.
Interesting. So some of the other things that at least I hear, and maybe some of my other people might actually be wondering about, are the other people using Bitcoin trading on the dark web?
Well, sure. Just like cash that you can withdraw from an ATM, you can use it for multiple purposes. You can use it to donate cash to charities, or you can use it on the black market to buy illicit drugs. So just like any other tool, it can be used for purposes that may not appeal to people. But just like every other form of monetary value and money, it's all about the user and the intent. So you can use Bitcoin to do good things and well-intended, as well as you can use them for negative things like, funding terrorism and buying drugs and whatever else you might think of. But you could do that with any other currency and asset around the world as well.
How easy is it to track someone that uses Bitcoin?
So the Bitcoin network is 100% auditable by anyone that has access to the internet. So every single transaction that has ever happened on the network is recorded and kept on there forever. Now, that's not to say that you can identify the address from which or to which the funds were transferred, but you are able to see the value as well as the timestamp that the transaction happened. And once it happens, it will forever be recorded on the ledger, and it can never be erased after the fact. So when someone opens a wallet, you have your receiving address and sending address. Those transactions will forever be kept track of on the network. However, your name specifically is not necessarily tied to that address. So while someone might identify that there were funds sent from your address to someone else, it would take quite a bit of work to identify you as the owner of that address that was being used.
So it's like having a Swiss bank account where they provide a certain amount of anonymity, but if I keep seeing a bunch of transactions go to the same Bitcoin wallet and leaving the same Bitcoin wallet and is coming eventually to a similar IP address, I can eventually track you down. But I think what we're probably talking about in this case, that if someone were going to track you down, they would have to have nation state-like capabilities.
I think that's an accurate statement. You would have to have and put in quite a bit of resources to find out who the owner of a particular address is if you wanted to, yes.
I guess it's a good thing that as of right now, no government wants to have anything to do with me, at least not yet. Hopefully it'll remain that way. So Andre, we hear a lot about all these different Bitcoin wallets that are out there. Mm-hmm. Why would I want one wallet versus another?
So there is really no difference between a wallet address. All the addresses are the same. They are alphanumeric string of letters and digits that identify your particular address. And if you have an address, you can send and receive assets through the Bitcoin network freely to anyone you wish to send funds or receive funds from. Now, there are some providers that make having a Bitcoin wallet easier from an interaction standpoint for people that may not be as advanced when it comes to knowledge of using computers and software, and they make it easier and simplify the process. And if someone does want to open up a Bitcoin wallet, I would definitely suggest you do the research on the provider that you choose. But there are ways to store Bitcoin assets offline and completely separate from the internet or any software. They're called paper wallets or cold storage, where you can easily put them in the safe or a bank or bury them in your backyard wherever you want, and it'll keep those assets completely offline.
So I guess another question that, at least people who have asked me, and hopefully I'm explaining it correctly. Mm-hmm. When we talk about Bitcoin mining,
sure,
what does that exactly mean?
Great question. So I guess let's talk a little bit about other precious metals, commodities, and a little bit of history of money and where mining comes in. So even though Bitcoin was created as a peer-to-peer monetary system, it does have its own issues, specifically an issue of governance and speed. So at this point in time, Bitcoin can only handle about 9 transactions per second. To give the listeners an idea, a network like Visa or MasterCard is able to of handling hundreds of thousands, if not millions, of transactions per second around the globe. So because of that reason, it is hard to foresee Bitcoin becoming a global transacting currency. It is far too slow and it is far too expensive. However, Bitcoin is widely seen as the new digital gold, digital store of value. And just like gold, which is mined, Bitcoin is mined as well. It is done in a digital way, and it is done through solving an algorithmic equation in order to verify the blocks and the transactions on the platform. So when someone talks about mining gold, we're talking about a physical process of using complicated processes, heavy machinery to actually extract gold from the ground. And the gold market is worldwide. It is priced also by the supply and demand for the commodity. And every year we have a certain percentage of gold that's introduced in the system. Bitcoin works in a very similar way. The miners are basically a set of computers or computer networks which verify the transactions in every block. They do so by solving algorithms which require energy and the computer hardware resources in order to solve them. And the miners that verify the transactions are compensated with Bitcoin, which at this point in time is 6.25 Bitcoin every 10 minutes. So the person or the miner or the company that's considered to be a miner that wins the algorithmic equation for that block of 10 minutes receives a reward of 6.25 Bitcoin every 10 minutes to basically keep its operation running and keep its lights on. They can use that Bitcoin to sell it on the open market, pay their bills, make a profit, and do so going forward.
So when we say they're solving an algorithm, are they solving a cryptographic algorithm?
That's correct. The difficulty of the algorithm gets adjusted on the network based on how many miners are solving the algorithm and how difficult it needs to be or how simple it needs to be in order to keep the block time at about 10 minutes. So it's measured in terahashes. And since the beginning of the network, that difficulty level has continued to increase as the use level for the network has continued to increase. And we've had more and more miners come online. And in order to keep the block time at 10 minutes, that difficulty algorithm has kept on adjusting to be harder and harder in order to adjust for the amount of people that are actually solving it every 10 minutes.
And this is one of those things when people talk, oh, it's a cryptocurrency. It's really because the currency is derived from solving a cryptographic function.
That's correct. Yes.
Right. Now, when did you first get started with Bitcoin? Did you go Bitcoin mining? Did you just buy someone's Bitcoin on the open market? Did you, maybe have someone off? I mean, you are in Chicago.
So I first heard about Bitcoin back in 2013. A friend called me up and she asked if I knew what Bitcoin was. And I actually had no idea what it was, but the reason she asked was because the price of one Bitcoin had spiked from about $70 to $80 to over $1,100 in a matter of weeks. And everyone was talking about it, so I looked it up. And initially, I didn't really give it too much thought. I completely forgot about it. And I had known that it was in existence, but didn't really start researching it until about 2016, early 2017. At that point in time, the volatility in the market had picked up. There were other projects such as Ethereum that came on board, and there were more regulated exchanges such as Coinbase in the United States that were becoming really prominent. And that's when I really started looking into what the project was all about, why it was valuable, and why the market cap of the network kept on growing. At that time, Bitcoin was trading at about $700 to $800, and later on in 2017, it had spiked to almost $20,000, and there was a huge bull run that happened in the crypto space, including other projects that went completely bonkers, and there was some irrational valuations on some of the projects. So that's what really got me started in the space. There's a lot of speculation. There's a lot of fraud that happens in the space. So I definitely encourage everyone that wants to get involved in it to do their homework. But there's some very valuable technology and projects that are going to be providing a lot of value down the line that are worth looking into and researching.
So you mentioned a couple of other types of Bitcoin, Ethereum and Coinbase. Are they different than Bitcoin?
Yes, so Bitcoin is its own individual project. Other projects such as Ethereum, Cardano, Dash. I mean, there's over 2,500 different projects now. They all use the blockchain crypto technology, but they are not Bitcoin. Bitcoin is a specific project that started it all. It has the first mover advantage, and it by far has the largest market cap of the whole space. I may be a few percentages off on this, but last I checked, it was in the 75, 77% market cap dominance in the whole space. So other projects like Ethereum are actually considered to be programmable money. They utilize what are called smart contracts and are referred to as a supercomputer or a worldwide computer, which can utilize smart contracts to execute certain tasks which can be automated. For example, a lot of people foresee smart contracts being used in real estate, insurance space, finance, and even in autonomous driving on the roads. So there's a lot of possibilities of where it can possibly go. At this point in time, the networks unfortunately are a little bit slow and undeveloped, but the potential is definitely there.
So you mentioned earlier that, like Visa and MasterCard, they are able to handle an insane amount of traffic. Is that just because of the effort and the resources they put behind it? So it is possible for a Bitcoin or an Ethereum or a Coinbase to gain that type of traction?
Yeah, it's absolutely possible. There are a lot of very smart people in the space that have PhDs in software engineering that have left their high-paying Wall Street jobs to work on these technologies because they believe and see the future in it. So it's definitely possible, and there's a lot of very smart people working on scaling these projects to a global level, yes.
So you have some Bitcoin. Do you have some Ethereum and Coinbase, or do you subscribe to some of these other cryptocurrencies?
So I want to mention and clarify that Coinbase is not actually a cryptocurrency project. Coinbase is an exchange. It's the most dominant and well-known exchange in the U.S., and it's an exchange that can be used to buy other cryptocurrencies. But yes, I do own Bitcoin, I do own Ethereum, and I do own other smaller projects that are more up and coming and are promising. And I believe we're just getting started. The space is about 10 years old, 11 years old. And when you compare it to other industries, we've mentioned gold and talked about that, for example, that's been around for thousands and thousands of years. So in the grand scheme of things, we are just getting started and have a long way to go.
Right. And so what was your high school mascot? I'm just joking. Because
eagle.
Yeah, I already know where you were born. I already know your mother's maiden name. So I'm just trying to, in the event once I know where all of your cryptocurrency is stored.
Unfortunately, this is a double-edged sword. When you store cryptocurrency, there are certain ways that you can back up wallets and your assets. However, if you lose your backups and forget your passwords, there is no 1-800 call center that you can call and get your passwords reset. It's a blessing and a curse because no one can forcibly take your assets. However, if you are not careful enough and you forget your credentials, unfortunately, you will be one of those people that can't get access to your assets as well. For someone that's been in the space for some time, there are countless stories of people that have lost hard drives or thrown them out accidentally or forgotten their passwords and have literally lost millions, if not 10 millions of dollars worth of Bitcoin and other cryptocurrency because they can no longer have access to it. And there's nothing they can do because the coding behind it would take a traditional classical computer literally hundreds of millions of years to try and break the code that holds the wallet's assets.
So what you're referring to is the password to the wallet.
Correct.
Yeah. So that all depends on the password strength that the person has put in the wallet. If they're utilizing ABC123, that's going to happen pretty quickly, because we're talking about the type of cryptography in order to store the password, which essentially the password is computed into a hash. That hash then translates to what the password is. So when I put in the password ABC123, it's put out to this big, huge, long string, and then if they match, then that's the password. So in the event I could get lucky, I could guess it in a day, or it could take 100 years or 100,000 years.
When I refer to the passwords of the wallets, we're talking about passwords that have already been built on the applications of the internet, and Windows and Linux and Macs, whatever you use. So those passwords are basically just human friendly, and depending on the strength of your password, you may be able to break those more easily, depending on how long or complex that password is. However, when we're talking about the actual private keys to the network itself, those are completely independent, and they are, I believe, 32 digits long, and are all equally hard to solve if you no longer have access to them.
Right, and this is why, because of the length in anything, matters. So because they set the default essentially to being 32, you could probably go higher if you so chose to, but 32 characters, that's a lot. Especially when we think about today, you've got, these Bitcoin wallets being 32 characters, but yet the FFIEC says we only need something like 12 characters. And in some cases, when we talk about our ATM debit pins, they're 4 digits. So that is a monumentally complex and stronger than our 4-digit pin that we have to use for our ATM cards. It's mind-boggling that we can't have something much longer than 4 characters, or actually 4 digits.
Well, I think the reason we use 4 digits for our ATM transactions is because it is secure enough and easy to remember enough for us to have personal access to. Obviously, there's other security measures, such as knowing the zip code if you are using your ATM card out of your traditional area where you live. They can ask for that. But there's also a layer of insurance that's incorporated with every traditional bank account, and your money is insured by the federal government and other entities, that even if your money was stolen, you're not going to be out those assets. So I think for that reason, there's really no reason to have 32 or 16-digit passwords for ATM transactions that have relatively low limits, and even if you do lose some assets, they are insured and you will be made whole.
Well, I would say I slightly disagree in that aspect, because there's some other things. Because really, the reason why there's only 4 digits in most cases is because of the factors of authentication that we use. Right. We have something something you have, something you are, and then now they say it's like something you do, the biorhythmic, it could be your voice, something along those lines. And the fact that an ATM card has the card, that's the something you have, the PIN, something those multiple factors of authentication is what makes it more complex. Exactly. Nowadays, this is why the PIN and chip became much more prevalent. I wish we actually had to put in the PIN. We just tend to use a chip. So the mag swipe is the weakest part of your ATM or credit card. And because of that, all I have to do is scratch, to basically damage the chip on there, and then it's going to default to a weaker security. That mag swipe means then I can wind up doing things in order to copy the card. If I was going in and doing skimming. I could then grab your 4-digit PIN and then make your card and use it at gas pumps, things like that. But with that, as Andre mentioned, it is insured. We can prove that you are not in multiple places at one time, because at least at this point in time, we don't have time travel. Exactly. So if all of a sudden your debit card is being used in Las Vegas, but you're in Chicago, it's probably not you, and that's where the insurance part comes in. Exactly. So, Andre, any closing words on, or encouraging words for people that maybe they should use Bitcoin if they're not, or whatever it is you may want to part with for today?
Sure. Well, first of all, I would say, Dan, thank you for having me on the podcast. And second, I would say for those that have looked at the space in the negative way, which there's been a lot of negative news over the past 10 years about it for a variety of reasons, I would encourage you to take a look into the space. There's a lot of positive that accompanies it. And I would say the future is very bright. And when I think of the space, I think of the red pill and the matrix. I think of it as an insurance policy against the collapse of the system. And I would encourage everyone to take a look into it and possibly invest in projects that you think sound interesting to you. Not necessarily any large amounts, but maybe 1% to 2% of your income as an insurance policy against our current systems that we have in place.
I think that's a great set of advice. I would close that if you are into trading in stocks, it's probably a risk appetite similar if you were going to be trading in, say, futures and things of that nature. And so if you're of someone that has that risk appetite, you should strongly take a look at the different types of cryptocurrencies out there. That is it for today. I thank you all for watching. Andre, a pleasure having you on. I really appreciate it. This was very informative, and I hope you will come back again soon.
Absolutely. Thanks, man.
Take care, everyone.